Hey there, Zach Silverman. I hope this email finds you doing well. We've had a busy week here with the Bank of Canada rate announcement, as well as CMHC dropping a little bit of a bomb on us with some new rule changes as far as insured mortgages go. So the purpose of this email is, as promised, to keep you updated on what's going on in the marketplace, and which we try and do every time there's a Bank of Canada rate announcement, as well as anytime there's any sort of special announcements, anything that's going to affect your mortgage or the mortgage world. Try and keep you in the loop. So, as far as the Bank of Canada rate announcement on Wednesday, as expected, everything stayed status quo. So prime rate in Canada is 2.45% at the majority of lenders. So that's not changing, and it's good news. We don't see that changing anytime soon with what's going on in the world today. We see that staying quite low for the foreseeable future, anyways, through 2021. Things can certainly change, but as far as things are going, the interesting thing to note about the Bank of Canada rate announcement is that they were quite more positive than we were expecting, and so with the positivity, not that they changed anything, but there was a lot more dialogue around how things weren't as bad as they had thought, and things were progressing ahead of what they had thought with COVID, and so with that, the bond yields have gone up, which is where fixed rates are based off of. That being said, the banks for a long time have had quite a bit of spread in the interest rate. So fixed rates are very low today, but in normal times without COVID and other stuff going on, we would typically see even lower fixed rates than where they're at today. So there's still lots of room in there, and we don't see fixed rates moving up anytime soon, that's for sure. So moving on from the Bank of Canada announcement, CMHC, we were hinted that there may be a change to minimum down payment a little while back, about 3 weeks to a month ago, that CMHC may be moving to minimum 10% down, and never really heard much more about it. There was just lots of chatter about it, and then yesterday we had an official announcement, and there is no 10% down minimum. So that's a good thing, but what they basically come out with is a little bit more stringent qualifying criteria. So this is pertaining strictly to insured mortgages, meaning less than 20% down, or if your lender or the bank who's looking at doing your financing does what's called back-end insuring, so meaning that it's an insurable product, but I don't want to get too much into those details. But basically what they've gone to is they've decreased the debt service ratios, which we need to use in order to qualify for a mortgage. So there's two different debt service ratios when you qualify for a mortgage. There's the gross debt service ratio, which doesn't include any other outside debt. That was always in 39%, which we could use to qualify. That's moved down to 35%. In addition to that, there's a total debt service ratio, and that's the TDS, and that is including your debt, what you can qualify for. That was always 44%, and that's now moved down to 42%. So we've gone from 39 and 44 to 35 and 42. What that's going to do to somebody looking to get into the market buying a home with less than 20% down is it's going to take about 11 to 12% off of their buying power. So just to dollarize what that effect what happens with that change. So in addition to that, we've increased the minimum credit score when you're looking at buying a home with less than 20% down. The minimum before this announcement was 600 credit beacon score, and now it's moved up to 680. So you now require a very good credit score in order to qualify for a mortgage with less than 20% down. The last item that they changed was taking away borrowed down payment. So you can no longer purchase a home with less than 20% down by borrowing the down payment or any part of that down payment. So whether it's from a line of credit, whether it's even some people were using credit cards, whether it's a loan from somewhere else, that's no longer an acceptable form of down payment. So it must come from your own resources or a gift from an immediate family member. So again, interesting times. Really surprised, to be honest with you, that the government and CMHC has come out with these changes amidst of all of the turmoil that we have right now. And we've had so many changes lately. So we'll see what it does to the market. These changes, I should note, this is an important part, take effect July 1st. So what I anticipate happening is we'll likely see a bit of a run-up in activity here between now and July 1st, and then we'll see what happens with the market. We may see a little peel back, the impact of this. We might also see a lot more parents having to co-sign and that sort of thing. So we'll keep our eye on what's going on, but I just wanted to get an update out to you guys. Hope this has been helpful, and any further questions, certainly don't hesitate to reach out.